am I going to be able to use all these rules? Like I talked to the best traders on the floor, even was looking online, which was pretty limited at that time about how much, what a trader was doing. And I just felt it was just not applicable to day trading. Even with the futures guys that I was surrounded by on the trading floor, I'm like, I needed to be more of an instinct. So psychologically, I had to make a shift from a rule to an instinct because I felt I didn't want to go and look at a piece of paper and talk about a rule later and go, oh, yeah, I broke that rule. It just didn't work for me. So I started to develop instincts, and really there's 9 of them that we'll talk about today. And really, it's not like there's some magic numbers to what it is, but these are just the ones that I talk about on a regular basis, that I think about on a regular basis. Because like I said, when you're trading, especially day trading futures, it comes down to really in the heat of the moment is when you're going to make the decision, and you need to make it right then and there. You can't make a bad decision and then later go, I'm going to fix it. You end up keep doing that. So I've learned that I have to make the decisions in the moment, in the heat of the battle. So one of the first things that I put down as my instincts were just be yourself, because I went through an identity crisis, as I'm sure many of you did. It was about like, what kind of a trader do I want to be? Who you see these other traders making nothing but money, and you go, I do the same exact thing that they do, and I lose, and it just blew me away. And I recognized after trying to be a lot of different traders that the only thing I could be is myself. I had to pick my own style. I had to pick my own strategy. I had to find my own market. And I'm going to get into risk per day and trade in month, but those are the things that I think in general they're very personal to you. And I want to talk about style first. Look, just because somebody is a scalper or somebody is a swing trader or a position trader and makes money, that doesn't mean that you're going to make money. I mean, I literally watched people do trades, and I would try to almost do what they were doing because I'm going, hey, these guys are all millionaires. Why not just do that and maybe I'll make money? And I just sitting there, I was baffled by the fact that they would do it and then I would do it. And I'd be late to get out, or I wouldn't have the confidence in it, and I just lose money. So I said, you know what? I got to find a style that works for me. I am somebody who loves to be in the market but can't wait to get out. So I said, you know what? I'm a scalper. That's what I'm going to look for. So I'm going to start building a strategy around my style of trading. So I started to look at indicators and different things that fit my personality and my style. And then you get to market. When you think about a market, it's very personal. I mean, look, the only 2 markets I trade, well, there's 3 markets I trade on a regular basis. S&P, Russell, and the 10-year ultras. And I trade those markets because I feel that I have a relationship with them. I feel like the movement makes sense to me. Russell is the more volatile one than the S&P, and I feel like sometimes it overshoots a lot. So I play that game. I think the S&P, I like the liquidity when I want to trade bigger and scalp, or I think price actually matters more in the S&P than it does like maybe in the NASDAQ or the Dow. Like the NASDAQ, I just can't trade it because I look at it, I get in, and next thing you know, it's 10, 20 handles against me or my way, and I can't wait to cover it. I just don't have it. Just that doesn't fit my style of trading. So I just feel that you have to decide what market fits your strategy. And somebody says Russell seems maybe would be hard. And the thing is why I use the Russell, for example, this past week, I've been sitting long the Russell, and I do it more on a swing basis because the Russell's one of those markets where I'll recognize, and I'm not going to get too much into strategy today, but where I've learned to just develop this relationship with it to where it'll get weak versus everybody else, and it'll stay weak. And then, like recently, we saw the NASDAQ get strong, and then everybody followed, and the Russell lagged. And then all of a sudden, you start to see Russell hold support, and then it outperforms to the long side. So I was just taking small positions in it to stay long with it because I felt that it would play catch up. And a lot of times it'll overshoot the other way too, and then maybe I look for a short. But I use it more for my swing positions. It's something I'll hold multiple days, where the S&P is primarily a day trading market. I do swing position it a little bit as well, but it's definitely more of a market I trade intraday, and I can trade bigger in it because it's got the liquidity, and like I said, price matters. But like I said, I'm not going to talk about all of that, but the point is like, I just, you can see why I trade those markets. I know exactly what I'm going to do in my approach for those markets. And that's extremely important to me. And risk per day, trade in month, because it seems so easy to think about this. But at the beginning of my career, I would say, okay, I'm going to risk 500 bucks a day. But what I really didn't think about was, okay, well, if I'm going to risk 500 bucks a day, I might be losing 10,000 a month plus commissions. And next thing you know, when I first started, I had a $25,000 account. I'm broke, you know. And so what I started to really put into play was, how much can I risk per day? How much can I risk per trade? How much can I risk per month? And what I would start to do is, I would almost like accumulate some of those good days that I would have, and I would use, meaning that if, let's just say, I was making money, I would risk sometimes on a specific day, if everything was going my way and I was doing well, I would have a bigger risk per day. But if I got whacked, or I had a bad week, and I didn't want to lose more than what I wanted to risk per month. So my day may not equal my month. My trade sometimes wasn't going to be, it's going to be a little bit different compared to how much I'm going to risk per day. So some days I look at the market and go, my risk per trade today is going to be a little bit smaller. So I feel like I'm constantly evolving with it, and I just have those things laid out for me, and I just stick with them. And it's just something that, for me, it's just a simple thing, a simple reminder of where I'm currently at. My risk per day and trades and month, and they're going to fluctuate based upon where I am and where I'm having success as a trader as well. When I start struggling, I get real tight, and meaning that I keep things really tight, to where if I start losing early in the morning, boom, I'm done. Now, perfect example, I'll just give you, like, even today. Today was, I got chopped up a little bit midday. I came off of a decent run. All of a sudden, I'm going, wow, I'm getting chopped up. I all of a sudden I started taking my risk per days or risk per trades down a little bit, because I'm understanding that this environment right now isn't great for me. So pull back a little bit. And that's okay. Just be yourself. It's just as simple as that. But I think too many people try to either be too big, bigger than they probably should be. At least I that happened with me. Trade according to the risk price is another instinct. Well, you think about this. Everybody searches for entries, right? Everybody wants the greatest entries. But I really don't even really look at for great entries. I look for areas where I know I'm going to be wrong. And then I just develop zones and areas to where I just trade against that area that I'm wrong. So trade according to the area that I'm wrong. That's really where I find my best entries. So I look at my strategy and say, okay, this is an area that I like. Where would I be wrong there? Okay, it's 10 points away in the S&P or whatever it is. I know in that range, I'm just going to continue to trade in that direction. And my contract size is going to be based upon how much I could risk in a day, how much I could risk in a trade, and knowing that my contracts are going to be determined as to where I'm wrong in that price. I think a mistake that too many people make is that they just look for good entries, and then they say, well, this is the stop. This is what my strategy says. And they trade the same contract size every single trade. That's what I did. And what I realized was that I was really not really controlling my risk. And I was held by these entries. And even though I would be right, let's just say a majority of the time, greater than 50% of the time, well, I was still losing money. And it really came down to going back to being yourself, knowing my risk per trade, knowing how far away I was from my stop. That would determine my contract size. And my contract size was always changing, because it was the distance from the stop, but my risk per trade wasn't. And that's why these two are really tied in, because it's psychologically, you say to yourself, I'm going to risk 500 bucks, and then I'm only going to trade 2 lots or whatever that is. And really, it doesn't really end up working out that way, because your stops might always be different, especially in volatility. It gets wider, then it gets tighter. And we're not adapting to where we are in the situation within the market. And these are just simple things that I had to fix, because I'm going, man, I said I was only going to risk 500 bucks a day. I'm trading 2 lots every day. Why aren't I making money? Well, because that trade was only 3 points away. You could have traded more. You should have made more in that position if you would have had more contract size on. You were really risking less than you should have. And then I could have potentially made more because I had more contract size on. Or that trade was really wide on the stop, and I traded it the same size I normally traded, and I lost more than I wanted to, but I followed the stop. I could go in and talk about this all day long, but these are things that once you go through the process, you just start looking at your statements and your results, and you're like, man, this is basic stuff. I'm just kind of screwing up. So trade according to the risk price will set up your position sizing, and you'll be able to stick to your risk per trading, your risk per day, at least more effectively. That's how it works for me. Always be a student. I mean, I feel like I'm a student every single day in this business, and if you don't feel that way, believe me, at some point the market's gonna treat start making you think that way. And watching while you are not trading is learning, and this is something that was very difficult for me because by nature I'm an over trader. But I started to literally just watch the action, just watch it, learn what's happening. I come in every day and just watch it. I mean, look at where we've come. Just look at the past 2 months of the market. Look at the past 3 weeks of the market. It's always changing. And I'm not someone who likes to fight what's happening. I like to embrace what's happening. So my psychology always is this is what's happening in the market. Learn from what the action is telling you. You could have your own um, fundamental analysis and your technical analysis. And when you sit down, watch what the market is showing you. Learn from it because the market's going to show us the direction that it wants to do something. Then I use my strategy to prove to me that I could be in it. And that really comes from being patient and sitting there and watching and waiting for what I want to see. And that's why I think it's so important to watch the action. I mean, I going back to myself just a couple of weeks ago, I was watching the action one day. I was sitting there and it was after I just had a couple of bad trades. I'm like, you know what, man, you're going to sit down, you're going to watch. And I watch and I'm looking around going, you're getting yourself chopped up. Look at what's happening. I went to a couple weekly charts, my daily charts, and I said, look at what you're seeing here. This market is getting ready to start to rally. I started to, just got myself back centered and said, Rick, forget about all the noise and all the news and everything else that's out there right now. This is what you're seeing. Start positioning yourself better for it. And I learned that from just sitting back and just watching and then waiting for my strategy to prove something. So this is important. Be a student, learn from what the market's showing us. React with reason. They all feed together. These are instincts, right? React with reason. Once I develop my fundamental thesis or theme for the market, which I'm not a macro guy, but I do read a lot of it. Every morning I begin my day reading and I read what are the journalists putting out and what is everybody talking about on Twitter. I literally spend the first hour and a half of my day reading blogs or a book or whatever it is. And what the day and what the feel of the market is right now. I just feel like I take in the most from reading at that time. So that's really how I start every day. Then I look and I say, okay, here's what I'm thinking. Now let's see if the market gives me a reason to get in. You need to be forced into trades because whatever we think is going to happen, I mean, sure, uh, it could happen, but a lot of times what the way we think everything is going to lay out, it doesn't always work that way, right? It's about the journey. It's not about the destination. I could tell you, I think the market's going to go up or down from here, but a lot could happen between that, right? So what you have to do is you have to literally get to an area that now it's forcing me to get in because going back to all of my instinctual things, right? Trading according to my risk price. Am I within my risk per trade? Uh, all of those things have to be lined up to where I am now ready to react with reason. Because I think that, and at least for me, I go back to myself because that's all I could talk about. Is I'm an over trader, so I think I always see edges, right? That's my problem because I think I always see something where I can make money on because that's what we're here for. But I need to be forced into trades and I need to be forced not to trade. So there is a really distinct difference, and you need to be able to. My worst drawdown this year was I got into the couple quick tick syndrome. Had a great day going, and all of a sudden I'm trying to make a couple of quick ticks, and I just got beat up. All of a sudden, quick moves are happening. I just got lost myself. It happens. And the next day I came in and I was a little rattled. I was up all night that night watching Netflix. I come in the next day, and next thing you know, I'm off to a rough start again. And it just kind of spilled over into it. And it's because I wasn't reacting with reason. I went back, got myself grounded, and said, "Look, react with reason, buddy. Quit trying to make a couple of quick ticks. Be aggressive." This is big for me because I believe you make money in moments in this business. I can tell you, I just look at my year this year so far. I've had some really good days. I've had some really good couple of days, some good weeks. But over the course of months, I've had several drawdowns. It's just reality, right? So the times when things were going good, I took more advantage of the market than on my drawdown. And I did so in those reasons because I I had everything going for me that I wanted. So I stayed on it. I stayed on it. I kept trading. And when things weren't going well, I wasn't aggressive. Like I said, when things start not working well for me, I lay off really quick. And I do that because I don't like the feeling of losing. It pisses me off. Okay. So when I know when I'm usually getting in that way, into where I'm just getting myself chopped up or I'm struggling, it's because I have a weak hand. And I know that I can't be aggressive. So if I can't be aggressive, I start to think to myself, well, what the hell are you even doing? So this is important to me because when I feel that everything is working my way and I'm mentally sharp and the market's giving me what I want, and I look at just this past week, I actually had a good few days because from last week into this week, because I was really hyper focused on longs, because I looked at everything and said, and there's just the path of least resistance was up. So I stayed away from really being short. I pressed my longs as far as I could. And it's funny enough, today I came in and got long a little bit, got stopped out. Then I sold the railing, got stopped out. I said, that's it. You're done for a little bit, because I got myself turned around and all of a sudden I had a weak hand again and I couldn't be aggressive. So this is, I think psychologically, when things are going well and you see it and it's working, you got to press it because, like I said, I think you make money in moments. And the goal is to make more when you're winning and less when you're losing. Pretty simple philosophy I have, right? Get out of the losers. I said nobody likes to lose, especially me. And it's not that I take it personal, and I think we're all used to losing in this business. It's one of those things as a competitor when you begin to trade. Most of us, at least for me, I was successful in sports. I felt that I was going to be successful no matter what I did in life. I had that confidence, and then you get in the markets and bam, I'm just losing. I just felt like a loser, and that's the wrong way of thinking. But it was just because I wasn't willing to accept the fact that losing is a part of the business. So once you accept it, it's like I look at it and go, like, even today, I pulled the plug really early on myself, and I covered a couple of losers that I covered them even shy from my stop. And you may say to yourself, well, why didn't you let it work to the stop? It's because I knew I had a weak hand. I looked at everything and going, if you got flat right now, would you get back in this trade? And the answer was no. So I just got out. I'm not perfect. Nobody is. And I looked at it and, I just said, get out of my losers whether it's the conditions changed or it gets to my stop, no matter what it is, I get out because I actually went out, took my dog for a walk, came back, ate a little something, took my dog back out for a walk again. And now I'm over it. I feel fresh. Tonight I'll look at charts and I'll go back in and have a fresh start tomorrow. But I think it's so important to be able to heal quickly. It's extremely important to me because the longer you let losses go, or the longer, even death by a thousand cut syndrome, it wears on you and it's harder to come back. It's harder to heal. Accept that losing is a part of the business and just have the ability to move on. Give yourself a chance. Stay in the game. Know when to stop. This all comes back to me today. I mean, all of these things today. This is why I talk about instincts, because they trigger things in the moment that I know to do something. Rules. I feel when I think of rules, like for my strategy as rules, my trading has instincts because I need to be able to make that decision right then and there. And I know myself well enough, and I've done this long enough to know certain things, know when to stop. I knew to stop today. I mean, I looked at the S&P, went all the way back up to 36, and it's so funny because this morning I bought the Russell and the S&P on the way down. Both of them got me stopped out, and I'm sitting there going, and I bought my first area that I liked. And then I said, you know what, this day might be changing. I waited. It comes back up at resistance. I sell them. They went my way a little bit. Next thing you know, they're all sitting against me, and I'm going, I'm toast here. And I just covered. And I look back and I go, thank God I did. I would have gotten stopped out on all of them. And it was just like, it happens. Know when to stop. Sometimes you get in a funk. Sometimes you get in a bad rhythm. That's trading, right? The market will always be here, but the question is, will you? Very, very important. Be disciplined. This is that rule that everybody talks about, but I don't think many people even know what it is. And I'm not saying that you don't or other people out there don't, but I didn't. And so this is one of those things where it says be disciplined or be patient, right? People say be patient. Well, what am I patient for? I have to know what I'm looking for when I'm being patient. And when I'm being disciplined, I have to know what I'm being disciplined to. And this is that thing where it's like, as a day trader, sometimes I'm really not patient because, man, I need to get in and I need to get in now. I need to get out and I need to get out now. So when you're patient, be patient to something that you know what you're looking for. When you're being disciplined, know what you're being disciplined to. For me, it comes down to a lot is I have my strategy. I developed my strategy many years ago. I'm always tweaking it and trying to make it better and adapting to what the current markets are showing us. And I just look at it and say, I'm disciplined to my strategy. I'm disciplined to the environment. I'm disciplined to my overall mental health, my overall physical health. They all matter to me, but they're not each, it's not just discipline to my strategy independently. Because if it was that, I would just automate it and I wouldn't, have the stomach pains and the random eye twitch and all the things we go through as a trader. I would just automate it and just go and randomly check on it and not be, managing it the way I am on a day-to-day basis. So when you're being disciplined, be disciplined to something. Have these things in line. And to me, they have to be multifaceted. They can't just be your strategy. If your strategy is so good, then just automate it. Well, maybe it can't be. But ultimately, I think that you understand what I'm saying. Be disciplined to the entire process that you have. Because for me, I look at everything and say the entire pie of everything that I have: mental health, physical health, meals, everything that I'm doing together. And when I'm functioning well, is one of my best work happens when I'm trading. Markets, my best days uh, are when I am good across the board. The market volatility, yeah, it matters. It definitely plays a role, but it's not the entire reason why I've had my best days or my best success in markets. It really comes down to me functioning at a high level consistently. And that's how I've gotten consistent with my trading and growth in it. So the other thing I want to talk about is creating balance to increase trading performance. I just talked about this with being disciplined to that entire pie of everything. It is equally important, if not more important, to work on mental and physical health, at least for me at this phase of my career. And the reason is because I don't really believe that first of all, I believe that once you learn how to trade and you have this skill set, it doesn't really matter what your strategy is, because I look at it like this, is that I feel like I can make money trading any strategy. Why? Because I'm going to think outside the box and I'm going to figure out how to make it work for me. I'm going to put it into my plan. And that's really what it comes down to. But in order for me to be able to perform at a high level, I need to have balance in my life. And I didn't have balance early in my life. And I was just looking at the charts from the age of basically 19 years old when I first got the itch after spending a year on the trading floor almost as a runner, to just studying charts for I don't even know how many countless hours I did. And I just was burned out. And eventually it hurt me at some point in my life. Obviously, well, maybe you don't know, but at 36, I had a heart attack standing at my trading screens. I couldn't believe it was 7:30 in the morning. And it's because I didn't have balance. Doctor said, look at Anthony, uh, you don't have a blockage, but you had a heart attack. And there's more to it. And I've talked about this in different videos. You can watch it if it is of any interest to you. But it really taught me something. This is over 6 years now. And I just think that what I learned from that was, in order to do this for a long period of time, I need to have balance. You've got to work on everything. I mean, we are mental athletes. And that means that doesn't mean just mentally we have to work on ourselves. We have to work on our physical self, and everything plays a role. At least for me, it does. And this is over 20 years I've been doing this. So I know myself, I know everything. So that goes on within my body and in my mind. And I really do need time off. I do need to work out. I do need to eat healthy. And I don't need to be perfect, but I've got to put enough time and effort into those things to help me be able to stay in this business. So it's extremely important to me to be able to create balance in my life. And the final thing before I start taking questions is really don't overwhelm yourself with change. This is another thing. I look back at myself and I say, okay, I'm the kind of guy who, if I eat something I like, I might eat that every week for, I don't know, or every day for periods of time. I have that type of personality. And when I want change, I try to implement it right away. And in trading, I've learned that that doesn't work. So what I try to do is I try to implement change over a long period of time. So if I want to change something, quick example, I was primarily a short-term scalper most of my career. You heard me talk about some swing positions lately. Now, I have traded those swing positions, especially since the micros have come into play, small and just trying to get used to holding positions, training myself to be what I want to be. I have a vision of what I want to be, and I'm training myself. And this has been a long time in the making. And I have really just tried to transform or actually add a part of my trading, a skill set with swing trading to my day trading, to be able to do it, because I felt that there was so many moves happening overnight, things happening, and I said, you know what, you can do this. But when you train yourself to be a scalper and a day trader after many years of doing it, at some point you get to the point where it's hard to hold a trade. So I was looking at some of these positions just over the last couple of weeks, got well within my wheelhouse of risk, said, you know what, and I'm going to hold these. And it trains me to do it. And this is, like I said, this has been, every time it's difficult, but it's getting a little bit easier for me to do this because I'm putting the time in. I'm not expecting a great result right away. I just want progress. So that's why I try to move the dial from 1 to 2 instead of 1 to 10. So that's my thoughts on instincts. Happy to take any questions from you guys. And if you want to step in, any thoughts or comments on everything. But that's my instincts.
Ant, I had a question actually. What you said something that rang a bell with me. You make your money in spurts. Is that how you said it?
Yeah, well, I mean, it's just as like I look back at my years, I mean, or even just like I said this year, it's like I have times where things are going really well for me and I outperform, and I don't outperform, meaning that like when I look at it, it's like I make a bunch of money and then all of a sudden it's like I feel, you just feel it's changed, or I'm not adapting to the environment a little bit, and then I might sit stagnant for a while, up a little, down a little, up a little, down a little, and I just make sure that until I'm getting back in my rhythm, and then it spikes again. My P&L is not like, it's never been this long, up to the right path. There's always small drawdowns. Obviously, everyone has them, but or doldrums I go through. It's very common for me because I'm not somebody who churns it out every single day. And there was a time where I was like that early in my career. I think markets were a little bit different at that time. And it was just like the day trading mentality of what I had. And I tried to turn out money every month or every day. And it was a little bit different. I think just the way that I was structured, and I think the way that markets were, ranges were a lot smaller. Volatility was a little bit less in that time. And it was just different. And as time got by for me, I just started to look at my stuff and I said, you know what, Anthony, you make money in moments. You make money when things are going really good for you. Capitalize more on those moments. It's the thinking of like, if I have a business to where I'm selling one thing that's selling really well, okay, and I have a bunch of things that aren't selling well. Well, I'm just trying to do more of what's selling well. And what's works well for me is when things are going well, I expand my risk per trade, my risk per day, and I press it because I try to get myself cushions to the next time. And like I said, that's not for everybody, but that's just how I do it.
Well, that's well said. And that was a good word. That's why I asked you to repeat it, because I think that people want to have that same result every day, every 2 days, 3 days, week. And it just doesn't work that way. It's like that in other businesses. It's not like that in this business. You got to take advantage of a market that fits your style and then be able to be patient and sit back if it's not conducive to the way you trade.
Exactly, Ian.
Either too volatile or not volatile enough. Now, Anthony and I met, and I didn't say this at the beginning, I think you met Brad Jelnick, right?
Yeah, Brad.
You interviewed him in your show, and Brad
Yeah,
was
I knew him well before that, but yeah, he's been on. Brad's a good guy.
Right. And so he came from the same prop firm I came from. In fact, I think I was like the 20th guy hired. He might have been number 30 or 35. He came a year after me. Not only a smart guy and a great trader, but very good at articulating. He's been on this, done a webinar or two for me over the years.
Yeah, Brad's excellent.
Yeah. So, and that's how Anthony and I got together. And then we find out we grew up in the same town, not the same neighborhood, but the same town, right? Melrose Park is where
Melrose Park. Yeah.
we were talking, we found out we almost went to the same school. So let me go, if you don't mind. I'll ask some of these questions, and you could
Sure.
we'll volley back and forth here. Mark asks, how do you look at sizing? Do you adjust according to a feeling or a process?
To me, it's response from the market. So sizing, once again, if make it in simple terms, right? Let's just use 2 points in the S&P is my stop. And in a perfect world, let's just make $1,000 easy, right? So 2 points, $1,000, 10 contracts, right? So if we get to, and you're within $2 of my stop and I get a perfect reaction, then I'm going to get in a majority of that 10 contracts as fast as I can. So like, let's just say that they hit the level and I see it bounce or, or break from it. I try to get in as many as I can in that area, because the closer I am to the stop at that moment, the more contracts I can get on. Now, so that's really how I use contract size. It's really just purely that math. If it's $1,000, I can't be more than 10 if I'm within 2 points. If I'm 3 points away, you just keep adjusting it. And that's why a lot of times I'll do, depending, there's a lot that goes into this, but if let's just say that the market is getting near my area, I might step in with one and then buy another one, right? We'll use long as an example. We're 4 points away. And then, and then we get to 2 points away. And at that point, now I've already got two from above, but now I see the reaction I want. It gets almost near my stop or the area I like, and then it goes my way, and I see like, whoa, they came in and it moved up. I might buy, well, how many can I afford to buy? And, I've been doing this so long. And if I'm within, a little bit of money, it's not perfect, I get in as many as I can right away. And that's how I do it. So position sizing is I just have a limit as to how many I can get in based upon how far I am away from the stop. That's really just that simple. Now, sometimes I will say that I'll double that or I'll add risk to it. Why do I do that, or how does that happen? And this has happened quite a bit this year, where I've been in areas where like the market's showing me exactly what I want. I get in, and then it goes a little against me, and then all of a sudden it goes my way. I've been making money, everything's lining up. I look across the board and I know, I'm like, this is it. What I might do is either cut my stop distance in half and add an additional position and manage two. So then I'll say, let's just say that stop was the stop on the original position was 4 points, and now we're 6 points away from it. I might say, you know what, I'm going to get in right now and I'm going to risk 3 on this additional trade. I know I'm getting a little complicated here, but I want to be honest with you at what I do. And I'll buy a position there that might even be bigger than the other one because it's a tighter stop. And I'll turn out of that one right away and then still hold my original position. And I do that because, going back to what Ann asked me, moments. I make money in moments. If everything's working out, and a lot of times I'm sitting on my hands, I'm well within my risk per day or my risk per month, probably up money if I'm doing that. I step on it a little bit. Now, I'm somebody that believes that if I'm making money, I'm getting all the response I need. So I just keep taking advantage of it. And that's where I've excelled in that, because that's where I've made my money. And I know if it stops working right away, I get flat real quick. So that's just how I do it. I don't know. Hopefully, I mean, it's like, I don't know what level everybody is of trading, but I don't know, Ant, if you even do that. I wouldn't be surprised if you did or do something very similar to that.
You know what I find about traders that I know that are real traders is there's two common denominators. Number one, you'll hear the guy talk early on in a conversation about his losers. We're not afraid to talk about crap trades, bad days, losing trades. And you talked about that early on in this presentation. That's one thing about traders that are actually in the market, right? And you'll get a lot of guys that don't want to talk about their bad trades because they don't want to give off that aura that they're not a great trader. Those are the guys that probably don't really trade much or never really have. So that's number one. Number two, to your point and to the answer to your question that you were just answering, was we're all trying to do close to the same thing, maybe not at the exact same time, but we're all looking at an area and we're trying to fight for our location.
Yeah.
and we're trying to put more or less on in that particular area. Might not be the same area, might not be the same bias and the same move on the same pullback. But once we get into that area, there's a common denominator of everybody trying to fight for that spot, that location. So you could come out of that area with your package on. And maybe it's smaller than you wanted, too big, and you got uncomfortable, right? And you got shook out of some or all of it. But that always seems to me, I always circle back to that when I talk to other guys, and it always comes out. We're always trying to do the same thing,
Yeah, that was well
right?
put. That's exactly, yeah.
And that's the beauty part of it. Now, with that being said, we're not all trading identical. We don't have the same risk tolerance, and it's not the same spot and everything else. It's all finding that spot and then fighting for that location. And that you used the word process. I think one of the better words used in trying to help ourselves and help others is that ready, aim, fire approach.
Yeah.
Right? Are you aiming and then firing and you're not even ready? Do you ready aim and you can't fire? Right? If you don't have that complete process, then you're not going to be consistent. You're not going to be confident. And you're not going to be able to put on multiple contracts ever. But
Yes.
one question that was a good one that I seen pop up from Tom: how do you improve your self control?
You would let your emotions, which I know people don't talk about as a part of trading, but they tell me what I need to know. I'm a big feedback guy. So that means that when I feel not good about what I'm doing, and I don't mean the uncomfortability of being in too big of a position because that's a different feeling. I'm talking about where I just know I'm in just a bad way. So, meaning that today's a perfect example. I did it to myself today. I just got myself turned around. And I just think that you have to you have to let your emotions surface and use them as strengths. See, people think trading with emotion is a weakness. I'm the opposite of that. I think it's a strength because how do you improve on self control? Okay, well, look at if all of a sudden I start getting over my skis, I know I'm over my skis. Use that because later you know you're going to be like, I was over my skis then. I knew it. Why was I doing that? Okay, well, your body told you that. Did you listen? And then when I get to that point again, you're like, stop. Today, okay, like I said, bought them and they broke, got me stopped out, sold them. I said, okay, here you go. You originally wanted to be long. You're looking at being long, and all of a sudden you're thinking too much. You think the day's turned around, and I just got myself in bad rhythm, and I just stopped it at that point because I looked at it. I looked around and I said, I just knew it. So it was like at that moment, I'm like, do I accept what it is? I'd rather be flat and took the loss on those trades than fight what my body was telling me at that moment. I just knew it was amazing. I couldn't wait to get in. And it was like, I was even telling you the area I was selling. So it was the 97 to like 99 in the S&P. It comes in there. I'm thinking to myself, I'm going to work 98 halves. And then all of a sudden it's straight 6 halves, 675, 7 evens. I hit the 7 evens. It goes 8 half bid. I just started laughing. I'm like, you couldn't wait to sell those. You don't want to work the 8 halves because you don't think you're going to get them. And next thing you know, they're another O bid, 1 bid. I'm going, oh my God. I'm like, you're done. And I'm short the Russell too. So, I'm just looking at it going, I know where I'm at. If you can accept it, you're always on the path of healing if you can accept it. That's the way I feel about it.
That's a good way to say it. If you recognize it, you're on the path to heal. You got to identify it though. You got to be in touch with yourself. No, that's well said. Peter, they say most of the volume on any given. Wait, let me read this correctly. They say most of the volume on any given is executed by trading algos. Do you think that's an advantage for us?
I don't think it's an advantage or a disadvantage. There's always somebody bigger. There's always somebody faster. I'm either going to try and get faster and compete with them, or I'm going to slow down and let them compete with me. I mean, that's the way I think about it. People talk about the algos. I go, look, I was the guy who was a bid and offer, the market maker for many years, like you, man. We worked the bid and offer all day long. I don't do that anymore. They do. So now I just, I use them to my advantage. Not that they are an advantage, but I use that, I wouldn't have no love loss if they were gone tomorrow, but I look at it like this. It's just, you recognize the situation, right? I mean, you talked about, Ant, how you said, we all know the area and we all fight for price. Well, once the algos, excuse me, can maybe they recognize it. I don't know. I'm not somebody who's saying that they can or cannot, but they force me to get in quicker because I've seen there's way more one-way moves. So I look at it and go, it's just identifying who you're trading against. I go back to the times where I was a majority of the bidder offer in the S&P every time my bidder offered. Because at the time there was 50 to 100. And a lot of times I was 50 or 100 myself. And okay, and then that changed, right? So then that other guy's bigger, right? And the guys in the pit, the top step guys, they had the majority of the orders than the lower step guys. It's just one of those things where, like I say, it's not an advantage or disadvantage, but it's just recognizing what they do and how they're doing it. They are better than us, right? I mean, maybe not, maybe that's the wrong way to put it, but it's like they're better at sticking with exactly what it is that they want to do than us. So I can recognize what they're doing sometimes and use that to my advantage. How many times have we seen these one-way moves? And that's one thing that I've really used them for, or these over-exaggeration on news where I'm like, they're wrong, and I'm like, because they race it to the bottom, they race it to the top. And that's just something I recognize. A lot of the in-between doesn't matter to me as much. But you look at it, for example, like today, they took them, they shoot them down, they come up, they got that same similar V bottom. That's similar to what I was looking at. If you look at even the S&P this morning on like a 60-minute chart, it looks almost like what the daily looks like. It's that same pattern where you're almost looking at it going, they're just going to go up and try to make, they're going to try and test the high. So it's just one of those things, I can't, there's probably not a great answer I can give for that, but that's just more of my thinking. I don't know, Ann, what you think about that.
I try to I've become much better at, and I call it looking over my shoulder, letting others get shook out. Am I in a good spot? And that's dictated by, did I just want to get in and I didn't, waited, and now I got in? Because chances are, had I gotten in when I wanted to, I'd have got shook out and then it would have rallied. So can I look over my back and see some pattern where other longs just got shook out? Now we have a chance to rally. You know what I mean? The early guys,
yeah,
which I could be one or would have been one. So I got much better at, whether it's the algos doing this, whether it's just the market becoming tougher to trade at times, let others get shook out, and then the path might be cleaner and clearer to rally, right? So they did that thing
yes.
on the lows, and they came off, and it gets everybody not only shook out of their longs, but it gets everybody stuck short or now bearish, and now they're wrong, and that's what creates.
That's what I'm exactly, because you go back to like me today. It's like I was the long early, and then I was the short, on the steamroll back up. And when I looked at it, all that pattern told me, because my strategy, support and resistance, I go, that's when I look at what the algos are doing, the algos, whatever it is, right? I mean, that's also, there's a lot of slow frequency algorithms. There's all sorts of things with that. So
Sure.
I tend to be more like I'm very pro that. I think that that's needed in our industry. I think it's good for a lot of traders. But going back to you recognizing that, you're going, if they see that pattern, they might step in and run that pattern. I don't know. I'm just aware of it. That's just all it comes down to. I just don't have a blind eye up to things, and I don't try to get defensive on it either, where it's like, oh, they're screwing me and whatever. You can't get that way either. You've just got to be in the moment and say, this is what's happening. What can I do about it?
And just because there's algos doesn't mean like they're all on the same team. There's algos
exactly
each other.
I know,
competing and everything else.
I know people make it seem like they are in the same team, and it's like they're all. It's like, well, electronic trade or automated trading has been around forever. I am somebody I'm actually trying to automate some of my stuff because I think that there's certain setups I like that I want automated. I'm a big believer in it. So I just look at it as there's not this us versus them. It's the market. And the difference is, and the point I was making is that they're just more efficient at executing it exactly as it's happening because it's a computer. And they've built it in to do it. So if you see something that looks similar, like we were talking about today, Ant, with that bottom, I looked at it and I go, I've seen that before. And all of a sudden I'm short and you're like, please don't run me over. I mean, I knew the minute I sold them and the response, I'm going, just buy them, man. You are toast.
Yeah. As soon as you get so comfortable about an idea or position is when you either want to do the opposite or not do what you're super comfortable at thinking you're doing. It's the one. Throughout my career, the trades that I'm like, I'm not really sure about this one are the ones that are effortless. And the ones that you're confident are the ones that are just ball breakers. So it's like you can't just go on what you think always. You gotta rely on your intuition and that education, that experience that you learn, that you see, that you always hey, listen, I'm trading better when I'm thinking like other people better. When I'm thinking about the market in the through the eyes of other people, I'm trading better because when they're all loaded up long or short, is when it's going to be those good locations to go the other way or to see them all shook out or loaded up. And then it's just those effortless moments. But to me, it's always been about the shakeout and getting better and better at recognizing when the weak hands are in and out. And now you're in and it runs and they're like, damn it. I lose money and I was right. Well, it's because you were early or late and you're reaching and everything else. And we've been there, right? And so
Oh,
that's what's important to not be in bad trades long. And I think you said that in one of your earlier slides. Cut your losers. Get out. Here's the other thing you said that was interesting. And it's right on. And that is you can't take anything too personal. It's like I hate losing and I'm really competitive, but I don't let bad days, I don't take them home with me or bad trades home with me
yeah.
because it's part of the business. You're supposed to be wrong in this business. I always say this, if you were wrong this much in a marriage, you'd be divorced 5 times, right? If you were wrong this much in a business, you'd be bankrupt 5 times. But you're supposed to be wrong, but you're supposed to be wrong and not for long and get over it and move on because those are the missed shots when you're firing, but you're ready, you're aiming, and you're supposed to pull the trigger. And you might have missed the deer, you might have hit, but at least you were supposed to shoot, and then you move on. You can't get too down on yourself. You'll just turn one bad day or one bad trade into a bad day into a bad week, all because you had a bad trade or two. Who cares?
I know.
Hey,
That's just the thing. It's like you feel it boiling, and next thing you know, it's not the first mistake you made, it's the second and third ones that are really bite you. And I think one thing I want to say is that, I mean, one thing that I've done is pulled all of my trades in. I think was very important for me. And looking at where was I at winners versus losers in my trading, because seeing that really dawned on me. Like I've had some great months, some great years, and I looked at my numbers and I'm like, man, I can't believe that I mean, this year I'm doing pretty well. Knock on, I got bamboo desk here, but whatever. I just feel like I'm doing what I want to do, right? And that's what's most important to me. I mean, it definitely had some bad drawdowns too, but the point is I'm executing the way I want. The results are going to take care of themselves. Hopefully they're good. But when I looked at everything this year, I'm 53% max at the end of every month. I pull all my trades and I say, where am I at? 53%. Now I'm not too much into stats. I don't want to be. And throughout the month, I don't think about it. But what it does trigger in my head when I see it is 47% of the time I'm wrong and I'm making money. I'm pretty happy with that. It's like, what happens? And I can tell you, I went back and I went into a drawdown, my worst drawdown of the year, or whatever it was. No, every day blends, but it was in March at some point. And I looked at it and I was like, I went from 53%. I went and just checked out that period of time down to like 49.7% of the time I was losing. And I looked at it and it was just really because I was clicking in and out of losers. That's what was happening to me. I got so tight that I was just death by a thousand cuts. And it was like I didn't cut off the losers when I knew I was already in a downward spiral, And it was just like, it just reminds me that it's the little things. It's like I go back and I think about it, and when I get to my next time where I'm struggling, I just go back to today. A couple of losers walked away, almost no question in my mind. If I were to stay today, I would have lost more money. I almost have no doubt about it, because at that point, number one, I kind of had a shitty attitude at that time because I was a little pissed off about it. And secondly, all I looked at was, after getting, somehow psychologically, the market turned me from being bullish every day and having great winners. So all of a sudden this morning, getting stopped out of a long and then getting into a short and getting stopped out with that, all of a sudden I felt that the next trade was going to be short again, because it was just only giving me to test resistance. So I knew in my mind, I'm like, you are done, man. Get out of here. And it just is, it's really as simple as that. I mean, you ever have that happen to you, Ant, where it's like, like they spin you around and you're going, I cannot believe all I wanted to do was be long and I just lost money short. And the next thing you know, you're looking short again.
I remember yelling out one time, and I remember it because everybody laughed because everybody knows how it feels. I remember saying, if I wasn't short, I'd be long right now. If I wasn't short, I'd be long. And
Exactly.
and everybody laughed because it was in the prop firm days because everybody's been there. Everybody
Oh,
is like, if
and
I
I don't
was
care how long you're doing it, it happens. Only
it
thing we
happens,
do
man.
better now is we recognize it quicker and we're willing to accept it quicker.
Well, like
Eh,
you're willing to miss um, some potentially good trades, so you didn't take the bad trades at the rest. Rest is you knew when to walk away. And that's about being a pro and not having to get everything back in a hurry, in a second.
Yes.
And that's what we all do. Our mind wants us to feel good, and so what it does when we have a losing trade, we want to have another trade real quick to get that winner or to get that loser back ASAP. If you miss a big break, you try to buy the bottom and then rally where it started to break so you could get the same profit, only opposite. So it's weird how our minds work. Trading for so long puts you in touch with how you think and what
Yeah.
our weaknesses are. And
Yeah.
so you could play away from them instead of trying to beat your head and making them strengths. Just say, you know what? That's a weakness. That's a hill I don't want to die on. I'm done. I'm done either for the day, I'm done for an hour, and then I'll come back and just reload. But you got to reload into something. You can't reload into, and a lot of people get into really not knowing what they want to do. And that's just really dangerous. You got to know what you're looking for so then it'll find you, right? If you got to search too long for something, when you find it, don't take it. You got to let it come and find you. And it will. But you got to know what you're looking for. So there's no doubt we all go through the same stuff, and it's just your ability to catch it sooner rather than later. Um, let's see, was another couple good questions in here. You trade the Russell, but you um, swing trade the Russell. You don't scalp or day trade
No,
it.
I don't scalp the Russell. I mean, when you look at my dome depth of market, I have it on dollar wides. I'm not even looking at it tick wide.
That's a good idea. So you're in and out in days,
Yeah,
sometimes weeks.
intraday would be like, I might have 2 trades in a day. And if I'm doing it intraday, price gets me out like everybody, so but I have been sitting long at the last week because I had something, it was one of my better trades, no question. And yeah, I mean, I like I said, I'm really with the swing positions, keeping them really small to be able to stay in them because that's not my strong point. It just isn't. But I see these moves. I'm going, half of them are happening overnight.
Right.
And for years, I've been trying to work myself into it. And I separated an account for it. I'm using the micros for a lot of these positions because I need to scale my way in over wider time frames. And I'm just trying to add to my craft, man. That's really it. I look at it and go, if it puts some extra money in my pocket and it turns out that maybe I get really good at this over time, like right now, my expectations are just to follow what it is I wanted to do. And like I said, for me this year, if you put everything aside, I'm doing what I want. I mean, I've had some, rough patches, but for the most part, I look at it as, are you doing what you want to do? Are you taking the trades you want to do? That to me is what's important.
Now
And
you're
that's what I'm doing
consistent
right
there.
now. Yes.
That's all that matters. What are your favorite who are your favorite authors? Do you have any or books, especially on the psychological
Yeah. I
area
mean, Denise
and
Scholl
risks?
is my favorite. She's been on my shows a bunch of times. I have the highest regard for her because I've had a lot of good conversations with her as well. So I would say Denise Scholl, number one. And you could either, you could Google her or whatever, find her books. You can listen to my podcast that I've had with her. And she was recently on my Develop Your Edge show, which is a video show. I started that a few weeks ago. I do it every weekend. And she's number one. Number two would probably be Dr. Steenbarger, who I know works specifically really with SMB Capital, who is just a great guy. I've met him in person, spoken with him a lot. He's been on my show as well. We've gotten some great conversations, and I know the prop groups he works with at SMB, Mike Bellafiore and the SMB crew, and they've got some great traders, and he works really with them and just hedge fund traders and stuff like that. But He would be number two. I would say one and two would be Denise and Dr. Steenberger.
I've had Dr. Steenberger on a few times. He's become a friend of mine. Good guy.
Oh, super
A
nice guy.
real, yeah, helpful guy. I didn't know you had him on your show.
Yeah, he's been on a few times. I
Okay.
actually went and met him and talked with him in New York City, and yeah, it was pretty cool. He's a good guy, good person.
Yeah.
But yeah,
He likes helping people. He's
he
very,
does, and people think it's like he doesn't make any money off individual people. He only works for
right.
firms. Yeah, he's got really nothing to even gain essentially by it because he's hired. He's on retainer, and he doesn't
Right.
go in and work with individuals. So Denise, same thing. I mean, Denise, I think does work with some individuals. And her and I were thinking about doing a workshop together at some point. Little plug there for her and I. Me getting a group of traders to do like a mental workshop, like a trader retreat. Thinking about that. That was prior to COVID, but we'll see. Hopefully, eventually that happens.
That would be a great idea. And I think a lot of people are interested in those kinds of things, especially when there is a sense of you get, I have the MO where when I have different a product or something to sell, I don't want people going in into a relationship. I want people to know what they're getting, and that's why I have a room that's essentially inexpensive. Get to know the people you're going to learn from. It's important to create a community around you, but there are bad communities and there are great communities, but it's important to have a community. I don't take that for granted, but I had that by default. Brad had that by default. You had that by default when we're in a prop firm and you already have guys around you. You have a lunch, you're just eating a sandwich with a guy, and it was a inspirational 20 minutes because you're talking about the business with other guys that do it. And so that's what's a big part of what's missing is, first of all, you got to know what you're looking for. That's important. But you also have to never stop learning and be around people who care about you, who want you to get better. You know what I mean? And vice
Yeah,
versa. That's missing in this industry. Uh,
absolutely.
People are trying to fill that void. And I think that's why my business is Edge Trading Group. There had to be the word group or community in it because that's what's important. And like I said, that's what's missing from a lot of things. And I think even Dr. Brett, he followed me. He retweeted this event. I tweeted it and he retweeted this event because he's seen you on there and me on there, and he knows both of us. And
Yeah. Well, I,
good
I got
guy
I
though.
didn't even see it. I haven't been on Twitter. It was like I said, I was outside with my dog, but um I spent a lot
I'll
of
tell you
time with
something about
her.
Twitter. I'll tell you something about Twitter and social media. If you have a business, you got to be on it and communicate certain ways, but you can't spend a lot of time just buried in all the negativity out there, right?
'Cause it's all not all of it, but a lot of it is negative. And I always look at it as like, last week, bringing everything to current day, I see everybody's still bearish. And I actually put a tweet about this today. I said, same people are always bearish. The same people are always bullish, and they're always defending their positions. I didn't write all of that in there, but I look at it as I can't defend any position if it's not working. It is what it is. I mean, why? I look at it and go, when we were on the floor, nobody talked the way that these people talk, because we were all just trading what was in front of us. Nobody was always bearish or always bullish. We're here to make money. That's it. And I'm not going to defend one way or the other. What's the difference? We're in a bull market. We're in a bear market. What does that mean? I'm going to trade differently. I've been long the last week, trying to stay long. The next week I might try to be short all week. I don't know. I mean, it's like, what's the difference? Trade what's in front of us.
Right.
That's the way I think, and that's why the negative sells. So if you're bearish and you want to get followers and all these other things, and you want to talk about how negative everything is, it sells. You want to be bullish and always bullish and extreme in what you're thinking, it sells. You want to be somebody who's like, I don't know, shit. Like, I don't feel like I have no idea what the S&P is going to do, but I'm going to be there to hopefully participate in the way that it's going. That's
I'm
the way I
gonna
feel about
be
it.
I'm gonna be good in my time frame.
That's it.
That's yeah. I'm gonna be
I mean,
good
I
in
don't
my
care
time
about
frame.
anything else. And I'm not somebody who thinks in extremes with the market anyway, because I feel like the market, it's about the journey. I've been right so many times and been wrong in making money. So I've learned my lessons that what you think may happen is great, but you've now got to sit down and actually make it happen or get in to be able for it to work.
And deal with
Otherwise, it
all the
doesn't.
emotions and all the doubt and
There's
all the
just
fear.
exactly. You could tell somebody the high and the low of the year, and they still might lose money.
Right. They would, or they'd get so scared they wouldn't have enough on. They'd be
You
mad
could
about
tell it.
something.
Yeah. So
One thing you said is so true, and I mentioned about you could always tell not just a guy if he's from the floor, but you could always tell if a guy actually knows what he's talking about if you know what you're talking about, like in this business, right? And it's to one of the things you said. It's like we're on the floor. It's just like, well, I don't know which direction. Let's just trade what's in front of us. And to what I had said earlier, it's you always could tell if a guy is worth his salt if he talks about crappy days, crappy trades first. He has no problem, right? On the floor, what would guys talk about? Their crap runs. You know what I mean? They're shitty runs. They're I got killed. When they're quiet, they killed it. You know what I mean? So
yeah,
that's
definitely
it's
a lot
like
of times.
it's the
Some guys
complaint.
not so much, but yeah, that's but there's always the few. And yeah, like you said, just the lunches and just everything, the camaraderie.
When I
It
hear
was
guys today, I get that not there's a few. That's why the people I'll have doing this on these shows, these 1 hour webinars I'll do from time to time are people that I know what they're talking about because I could tell just like you can if someone is doing this or they did do it and they could provide some help because it's like anything else and 80/20, 80% of the people out there talking about trading don't know what the hell they're talking about and about 20 or maybe less than that do and you could generally find out who that is. And that's the tip I'd give people if you're really searching and trying to find. Talk to someone who talks about bad runs, bad days, bad trades, bad thoughts, because that's the guy who's being honest with you, being honest with himself. And that's the only way you're going to learn because you're going to have those same thoughts even when you're successful. It's part about getting successful and staying successful. But I don't want to keep you any longer, Ant. If there's anything else you want to add, it's been a pleasure to have you, and I really appreciate it. You're
no,
welcome
thank
back whenever you
well,
want.
awesome. Yeah, no, thank you so much for having me. I always love talking with traders, and for me, it's always when I get into these things, uh, they help me work through a lot of what I'm working on in my trading and what I'm doing current day. Like even just me talking about what I did today and what I've done over the last week or so and just what I've done this year. It gets my brain back to reinforcing what I'm doing and thinking and hopefully you guys got something from it. Thank you those of you that enjoyed it. But I think that for me, it definitely helps myself. And I feel like when I talk about those things, you're talking with like-minded people that understand it, and it brings my thoughts to a voice. And then you start hearing, you're like, yeah, you've been doing that. That's pretty good. You've not been doing that right. Let's work on that. I'm somebody who's always, I feel like I'm always working on my craft, man. Every night I think about it, I visualize it. So thank
The
you so much for
sounding,
having me.
yeah, no, the sounding board is huge. The interviews you do are great. You've turned into a great. I know you didn't come up being an interviewer, but I listened to your interviews, and it's like you've been doing it a long time. You know how to ask questions and
Well,
have a
thank you.
nice Q&A conversation. So keep up the good work. But thanks again, and we'll stay in touch.
All right, guys. Cheers. Have a good one. See
All
ya.
right,
Bye.
I recorded it, guys. We'll pop it to YouTube in the next day or two. And thanks again, man. Have a good rest of the evening.